Commonwealth Bank reports a $9.8 billion profit, demonstrating its growing strength in the Australian market. The latest NAPLAN results show government funding is failing poorer families, and the corporate watchdog alleges that ASX Limited misled the market. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 15th of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the country's largest company, the Commonwealth Bank, has unveiled a better than expected cash profit of $9.8 billion, down 2% from last year, and a hike in its dividend.
The $2.50 a share final dividend takes the full year dividend to $4.65 fully franked. That's a dividend yield on its current share price of just 3.5%. But most investors have been in the stock for much longer, meaning they're getting more like a 5% plus dividend yield. They've also gotten growth in the share price. That's a pretty good return. The all-important net interest margin, the difference between what a bank pays on deposits and receives on loans, was steady at 1.99%. That's a good result. And while the economy might be slowing, people are still paying back their home loans, with the majority of mortgagees in front of their scheduled repayments. The bank's impaired loan expense, what it puts aside for bad loans, it fell, demonstrating confidence in Commonwealth Bank's loan book. It's why the bank's share price rose following the announcement yesterday. It finished up 1.3%, even though it is very highly priced already. It's got a market valuation now of over $222 billion, which is more than the combined value of the next two biggest banks, National Australia Bank and Westpac.
Sean, you just said the Commonwealth Bank is highly priced, and previously you've talked about the market being priced to perfection at the moment. Was yesterday's result good enough to match just how much faith investors have been putting into the bank?
Seemingly, yes, even though most professional analysts still think it's way too expensive. Commonwealth Bank just keeps growing its market share. The proportion of Aussie bank customers who say CommBank is their primary financial institution is 35.5%. That's phenomenal. The next best is 16.4%. The other two big banks are more around that 11-12%. It has 24.5% of the home lending market, 26.5% of the household deposit market, and 25.5% of the business market. Now, given there are four major banks plus a bunch of smaller operators, these are pretty impressive numbers. CommBank's also getting better at convincing customers to use its channels rather than third parties. For example, 2/3 of Commonwealth Bank's home loans are sold via its own channels rather than through mortgage brokers, so 66%. For the overall market, it's only 28% are via owned channels. The question, though, is the bank too expensive at more than $133 a share? Well, analysts argue that the CommBank is trading on 3 times book value. What that means is 3 times the value of the bank's net assets. Now, NAB's trading at 1.9 times book value. Westpac and ANZ are around that 1.4 times book value. On that metric, based on assets owned by Commonwealth Bank, it is very, very expensive. But still, investors are very keen to buy Commonwealth Bank shares.
Indeed. And of course, we are not an investing podcast, and you should seek professional advice before making investment decisions. But Sean, after the show, stick around because there's an interview coming up with Commonwealth Bank CEO Matt Comyn about yesterday's results.
Yeah, so during reporting season, we're working with the team at AusBiz to bring you interviews with leaders of some of Australia's biggest companies. Yesterday afternoon, David Koch spoke to Matt Comyn. The chat gives great insight into the strategy behind the bank's results and what we were just talking about, what Matt Comyn says to analysts who think the stock is too expensive.
Yeah, Kochie and the team at AusBiz do a great job. They are Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy, startups. You can find it all. Head along to ausbiz.com.au to sign up. It's absolutely free. Sean, local markets, how did they perform yesterday?
The S&P ASX 200 closed up 0.3% to 7,851 points, with healthcare, technology and real estate stocks doing best. Much of the action was around the stocks that were reporting. Otherwise, REA rose nearly 4%, Goodman Group jumped 3%, WiseTech Global 2.6%, and CSL was up 2%. Iron ore prices fell yesterday to a 4-month low, with futures dropping to $96.50 a tonne on the Singapore exchange. That really hit the major miners. BHP and Rio were both off nearly 3% yesterday. Fortescue Metals tumbled closer to 5%. Plenty of results around the place. One worth a mention is Bunnings landlord BWP Trust. It delivered a big jump in profit, sending its share price up nearly 3%. Takeover target Aurora's share price jumped 5% after the packaging group's underlying earnings beat estimates. Remember, on Tuesday, Aurora rejected a $2.55 a share bid from a US private equity group. Yesterday, its share price closed at $2.39, not far off that $2.55 level. And also worth a mention, coal and copper group Evolution Mining, its underlying profit nearly tripled on higher prices of the precious metal. The result beat expectations. Its share price jumped 7%.
Sean, BWP Trust, which you mentioned,
You love
Bunnings
it.
landlord.
This is your favourite.
So what they own? They own the warehouses and lease them to Bunnings.
Yeah. It's a great little business because if Bunnings is doing well and growing, then presumably BWP Trust is as well.
Some fascinating businesses and some great stories around.
There sure are. And Michael, that's something we actually talk about in today's Ask Fear and Greed.
Fantastic segue, Sean, because Ask Fear and Greed is our bonus podcast. Comes out at midday every Tuesday and Thursday. It's where we answer listener questions. If you've got a question about anything to do with markets or the economy or anything like that, send it on through via the website, fearandgreed.com.au, any of our social media platforms. Today's question, it feels like it's right up your alley, Sean.
So to speak.
Goodness me. Who knows what you're going to get at midday now. Stick around for that one. International markets. Much going on?
Oil prices are higher following a report showing a sizable drop in US crude stockpiles. Gold prices are flat. Aussie dollars up a bit, buying 66.3 US cents. Also yesterday, the Reserve Bank of New Zealand announced a surprise cut in interest rates, dropping the benchmark rate 25 basis points to 5.25%. And that, of course, compares to our benchmark rate of 4.35%. So the Kiwis pushed rates higher, quicker, and now they're cutting before we start cutting. It's actually the first time that the Reserve Bank of New Zealand has cut since the COVID-19 pandemic.
Does the Reserve Bank here take much notice of that?
Diplomatically, I'm sure they take notice of everything that's going on around the world. In reality, probably not.
Thank you for a very direct answer to that one, Sean.
Well, there are interdependencies between Australia and New Zealand, but to be honest, what's happening in China is more important for Australia probably than anywhere else in the world. So, I mean, I'm sure they're interested, but it probably doesn't mean a lot for what the Reserve Bank's going to do.
All right. I just slipped my own Ask Fear and Greed question in there. Thank you very much, Sean. We'll be back in a moment with the rest of the day's business news. Sean, immigration from Gaza has become the hot political topic at the moment, with opposition leader Peter Dutton calling for a blanket ban on arrivals from the region based on national security concerns.
That call was pretty much immediately rejected by Prime Minister Anthony Albanese, but it's a difficult issue for the government to address. Home Affairs Minister Tony Burke played down the coalition's concerns that any Palestinian refugee who harboured sympathies for Hamas, a listed terrorist organisation, risks being granted a visa to Australia. He said that Australia's security agencies were involved in the vetting process, which hadn't changed since the coalition was in office. Now, the Department of Home Affairs has rejected more than 7,100 visa applications from Palestinians since October 7, according to The Australian. At the same time, the department has granted 2,992 visas to holders of a Palestinian Authority travel document, the vast majority receiving visitor visas. Around half of those visas have actually resulted in a journey to Australia. Now, more than 9,000 visas have been issued to Israeli applicants since October 7. Only 235 applications have been refused.
AGL Energy's share price surged as much as 5% yesterday before finishing up 2% after the group said earnings in the current financial year are likely to hold up better than forecast.
Underlying profit at the energy giant went from $281 million in 2023 to $812 million last financial year. Now, that result is pretty good, though it was only slightly ahead of expectations. It comes after the company had already upgraded guidance twice in recent months. AGL also declared a much higher dividend. Now, the higher profit was due to improved performance at its power stations and higher electricity prices. The company warned that 2024 was a boom year and unlikely to be repeated, at least in the short term, though the fall in earnings won't be as significant as previously expected. The group also announced $250 million of battery and solar acquisitions, which boosts AGL's pipeline for potential projects by 8.1 gigawatts of capacity. The most promising of those projects are in Queensland and New South Wales.
Now, I mentioned this next one at the top of the show, Sean, and it really is quite shocking. 1 in 3 children are not performing at baseline numeracy and literacy standards, with poor kids suffering much more than rich kids.
That's despite the state and territory government spending about $40 billion on schools each year and the federal government spending around $26 billion. Results from the 2024 National Assessment Program Literacy and Numeracy, much better known as NAPLAN, shows that at a Year 9 level, the percentage of wealthy children below the national standard for reading is 3.9%. For poor kids, it's 47.7%. The trend occurs across all school grades and across reading, writing, spelling, grammar and punctuation, and numeracy. The figures come in the 13th year after businessman David Gonski recommended a needs-based approach to education funding. 13 years is relevant because anyone in kindergarten in 2012, when that report came out, is now in their final year of schooling. The poor standards were widely criticised across the country yesterday, and they come as the federal and state governments ready themselves for a new funding agreement later this year. Let's hope that they can make some headway into that just atrocious statistic about poor kids v rich kids.
Yeah, that is really quite extraordinary. Now, the corporate regulator, Sean, has alleged that ASX Limited, the share market operator, made misleading statements about how the overhaul of its clearing and settlement system was progressing months before it revealed the crucial upgrade was actually failing.
Now remember, the ASX Limited, the company, should be beyond reproach because it operates the market. It's the one that goes out and says to companies, hey, your share price is moving around. What's going on? Have you been informing the market correctly? Etc., etc. This lawsuit in the federal court is the first litigation against ASX for the botched upgrade of the post-trading platform. ASX faces a maximum penalty of more than $500 million, according to a report in the Fin Review. The replacement of CHESS, as the clearing and settlement system is known, by blockchain technology was eventually abandoned. Work started on the project in 2015, and a more basic replacement is now likely in about 2028 or 2029. That's how poorly it's gone. ASIC has alleged that comments from ASX in February 2022 that the CHESS project remained on track for go live in April 2023 and was progressing well were misleading. The company only revealed that the project had unravelled in November 2022, 7 months later. ASX chair Damien Roach, who has been in that role since April 2021 and on the board for a decade, is pretty much in the firing line on this one. ASX Limited share price fell nearly 4% yesterday.
Sean, another big result yesterday, Pro Medicus's share price surged more than 7%, even though the medical imaging group said it's going to be tough to keep up its current growth rate.
Yeah, that's because its current growth rate is about 37% or something or other.
That may be a touch hard to sustain.
I love this company. It's been a share market star. Its price has more than doubled over the past year. It's now got a $15 billion market capitalisation, a top 40 company, bigger than Qantas, bigger than JB Hi-Fi, bigger than Treasury Wine Estates, though most people won't have heard much about it. It basically worked out how to stream medical images to workstations and mobile devices, meaning diagnostic decisions can be done remotely, totally reinventing radiology. Pro Medicus's founder and CEO, Sam Hupert, he's been with the company, where he founded the company just over 40 years ago. And since the beginning of COVID, its share price has gone from about $20 to more than $140. Yesterday, Mr. Hupert said he believes the company can maintain its trajectory of strong, profitable growth. But keeping up these 37% growth rates might be a bit tough.
Yeah, just perhaps. Seven Group has made a push into the industrial sector. It's paying dividends, with the company reporting a 20% jump in underlying earnings to $1.4 billion last financial year.
But the conglomerate, controlled by the billionaire Stokes family, warned profit growth is likely to taper back to high single digits this year, according to Chief Executive Ryan Stokes. This is a fascinating company nowadays. The WesTrac Caterpillar unit, which sells and maintains heavy machinery for mining, contributed around 45% of earnings. Profits from building materials group Boral rose slightly, while earnings at industrial hire company Coates jumped sharply. Not doing so well is oil and gas group Beach Energy, where earnings fell 9%. But I think the black sheep in the conglomerate is Seven West Media, where revenue fell 5% and earnings tumbled almost 60% on weaker advertising sales. Seven Group's share price jumped 7%, while Seven West Media, which is listed separately and majority owned by Seven Group Holdings, it was up 3%.
Okay, turning to international news now, and Japanese Prime Minister Fumio Kishida yesterday announced he will not seek re-election as head of his party, meaning the end of his premiership after just under 3 years.
The ruling Liberal Democratic Party has governed Japan almost uninterrupted since 1945 and is due to hold an internal leadership contest next month, according to AFP. Its popularity has slumped somewhat because of rising prices. There's also been a bunch of scandals hitting the party as well as the Prime Minister. Mr. Kishida said it's important to show people that the Liberal Democratic Party is changing. He said the first step in doing that is for him to step aside. The head of the ruling party is traditionally also Prime Minister, and the 67-year-old Mr. Kishida has been in office since October 21 and has seen his and his party's poll ratings slide sharply in response to rising prices hitting Japanese incomes.
Sean, we have never talked about Pop-Tarts on Fear and Greed.
Alas, we have not.
Today is the day.
Yes.
Because Mars, of course, the confectionery, food and pet care giant, has reached an agreement to acquire Kellanova, which makes Pringles and Pop-Tarts, among other things, for more than $29 billion.
Yep, one of the largest deals of the year, according to a report in the Financial Times. The offer made by the privately held Mars company is a significant premium to where Kellanova's shares were trading just a few months ago. Now, the price Mars is offering is unusually high for the consumer sector, especially for a company making products that have fallen out of favour with health-conscious customers. Kellanova itself is only a couple of years old. In fact, I think it was created last year. It came out of Kellogg, and Kellogg decided to separate its breakfast cereals and snack businesses. So things like Cheez-It, Rice Krispie Treats, Eggo, is that how you pronounce that? E-double-G-O? Eggo? Pringles, Pop-Tarts, they're all part of this Kellanova business. Mars, which is one of the world's largest family-owned businesses, it's got annual sales of $50 billion, about 150,000 employees. It wants to take over Kellanova for about $29 billion. Have you ever had a Pop-Tart, Michael?
Yes, I have. Have you?
I've tried one. I've had a bite. Disgusting.
I mean, you lived in the US for a number of years. You worked there for a long period of time. Surely you would have been swimming in Pop-Tarts and Eggos and Rice Krispies and all of these kind of snacks and treats.
Yeah.
You're too healthy.
Swimming. Yeah. I don't know. Now, Pop-Tarts, they're the ones with the jam in the middle, aren't they?
Yeah, and a whole bunch of those chocolate ones and all kinds of different fillings.
And don't you toast them? Like they used to toast them as well.
Yep. Yeah, you really don't know much about Pop-Tarts, do you? Or about Eggos.
I don't.
You're not a snack expert. I've realised this now. Over a long period of time, you don't like hot chips. Now you don't like Pop-Tarts and Eggos and you just don't like nice things, do you?
I don't really eat meat much either.
What do you eat? In fact, I've never seen you eat.
Fading away.
This is a scandal. Sean is in fact a vampire. Up next is the Fear and Greed Daily interview. Commonwealth Bank boss Matt Comyn is the guest today.
Yes, he's talking to AusBiz's David Koch all about the results yesterday. It is a definite must list for all our listeners out there.
Yeah, it sure is. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And keep listening at midday. Keep an eye on the playlist because there will pop up the bonus episode of Ask Fear and Greed. Check out that one as well. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 15th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.